Welcome to episode 6 of the Trading Bootcamp. In today's video, I'm going to be going over inversion fair value gaps, which is kind of the opposite of what I've just taught you in the previous video. So it's going to get kind of confusing, but this is the main component in the strategy that you're going to be learning. So this is probably the most important video that you understand. If you've got any problems or any questions about any one of my videos, then make sure you join my free trading Discord, which is in the description. In there, you can ask me any questions. I've got a free chat room, and also all of my students are in there as well that know this strategy, so they can help you as well. Don't forget to like and subscribe, because you don't want to miss any more of this trading bootcamp. And without further ado, let's get straight into this video. In the previous video, I taught you what a fair value gap is, okay? And we should know by now, and you should be able to identify clearly what a fair value gap is. So here, we have got a bullish 1 minute fair value gap. Clear and obvious, okay? The wick starts there, and the third candle starts there. So in between is a fair value gap. Now, obviously, like I said in the previous video, you want to be using these in continuations. So you can see that it's already started happening. So we've swept this low, which you should be able to identify now after the liquidity video. So we have clearly took out this low here. So that has now been swept. And you can see we've had a good reaction out. So this could be the start of a reversal. And you can already see that people are using this fair value gap to go long. Okay? You can clearly see that already. We've come up, tapped back in, and we've started bouncing out. So we now know, or you should already know, and this should already be ticking in your brain, that stop losses are either situated below this fair value gap, because this is where people like to put the stop losses, or it's below these lows. Okay? This should already be happening in your brain. So now that we know that there's money here and there is money below, now the way that I use fair value gaps is the opposite of what I've just said in the previous video. So the majority of traders, okay, use these to go long from, and they actually wait for the bounce from a normal fair value gap. Now the reason that the model works is because we want to see these inversed. So we want to see the opposite of this. And what that means is where a candle actually just breaks through the gap. Okay, like so. So this is now where we, and I personally, and people that trade this model, we now look to go short from bullish fair value gaps, which is obviously kind of confusing because I've just taught you the original way to use them. But this is how you need to think of them, okay? So we want to see momentum breaking. So we actually go short from these and we will target the lows, okay? And that would be our trade. Now, I'm not going to talk about trading and entering trades using these because I want to break down why they work, okay, and how to identify a good one. I'm going to try and do like another example. I don't know why I keep doing these examples, but I don't know. I feel like it helps you learn a lot better. Okay, this is what I've drawn over here. Now, the way I think of it and the way I think you should learn it is if you imagine all the momentum in this candle, okay, and all the buyers, it's clear and obvious, okay, that's when people look at it and think, okay, if there's this much momentum coming up, I want to be part of this move. So then what people do is they wait for it to pull back, like I said in the previous video, they wait for the train to come back and pick them up, and then they get in. So they want to be a part of this bullish momentum. Now the way you've got to see an inversion is imagine if that bullish momentum gets inversed. Okay, like, I don't know if that's going to give you a light bulb moment or it's going to, like make something click in your head. But that is how I think you should see it. So imagine if that bullish momentum that everybody wants to get involved in suddenly gets broken. And at that point, it should be ringing alarm bells and something should click in your brain thinking, okay, maybe we're not actually that bullish and we're going to go lower. I do not know if you're going to understand what I mean, but I'm going to go with it anyway. So we have got so much bullish momentum here that everybody wants to be a part of. We've just swept this low. Okay, so we've took out these stop losses, which were resting over here, below this low. And we've now started pumping up. So this is where people are panic buying and looking to get in longs to target, the highs up here. Because, of course, there's a lot of money resting up here as well. Above every swing high and above every swing low is money. And we know that the market moves because of money. So once I see a clear and obvious gap get absolutely wrecked like that, okay, you see no bullish candle at all, we've just completely disrespected it. That is when I suddenly flip and I want to get in short because I don't want to be a part of these longs. Okay, I don't want to see this come up. I want to see this momentum now clearly pushed down, because if we're pushing down with so much momentum that we've broken this momentum, then we should go lower. That's, I'm kind of trying to explain how I see it, but that is literally all I can say. It's kind of like a battle, okay, of the buyers versus the sellers. And if the sellers completely destroy through the bullish momentum, okay, it should come lower, okay? That is how you should see it. Once I see a fair value gap, it has to have these three things, okay? For it to be a valid inversion fair value gap, I have to see these three things. And it's like, these are my rules that I use, and if it doesn't apply, then I will not enter a trade. So the first one, clear and obvious. What I mean by that is the fair value gap clear and obvious? Now, if I look at this chart, okay, I'm going to give you like 5 seconds to point out clear and obvious fair value gaps. Pause the video, okay, and look around the screen. Where are the clear and obvious fair value gaps on this screen? So the ones you should be pointing out are this one here, okay, I think that's clear and obvious. I think this one here is also clear and obvious. I think this one here is clear and obvious. This big bearish one. I think this one here is clear and obvious, okay, and possibly this one up here. Okay, actually, yeah, I would say this is clear and obvious too. So those ones I would say are clear and obvious on this screen. There's a lot of fair value gaps here, small one, all these are small fair value gaps. There's no real ones that stand out to me anywhere. So once you've identified the ones that just stand out, okay, you don't have to zoom in, and it just looks on the screen, your eyes instantly draw to it. That is what you want to see. Now, secondly, is it the only one in the leg? So what that means is the fair value gap the only one that you can see in that price action? So here, in this bullish leg, this is the only bullish gap that there is, and it's clear and obvious, okay? So again, it applies to number 2. An example of what wouldn't be the only one in the leg is this. So you've got a bearish, you've got a bearish, okay, you get the point. Now, once you've got those 2 points, so you've got a clear and obvious gap, it's the only one in the leg, the third thing you need to see is it broken through with momentum or displaced through. Now, what you don't want to see is price to do this. If price does that, then the chance of it winning dramatically reduces. Like, it's got to be smashed through. And you've got to think of what I said previously in the video. It's like the bullish momentum is there, and it's got to break with even more momentum down, okay, the opposite way, for it to be valid. If price starts, hesitating and starts trickling through it, and then eventually breaks, it's not, I kind of lose interest in it because the momentum clearly isn't there. Okay, so what I'm going to show you now is another example, but in a different scenario. You can see here that we've got this clear and obvious high. Okay, I'll mark this out. So you see here, it's a clear swing point. We come up and we start pushing lower, and we have not yet revisited this price. So once we know we have got a liquidity level here, okay, we mark that out. Now, personally, I do not know again if this is going to get swept. I don't know at all, but I would like to see it swept if I'm going to look for a move down. And you'll see that when we come up, we actually form a fair value gap that's in the sweep of this high. Look how clear and obvious that bullish gap is. Okay, this is kind of like my favourite setup, and it also applies those 3 checklists. Is it clear and obvious? Okay, that is clear and obvious to me. It should be clear and obvious to you. Okay, it's the only one. Third point is, do we displace through it? Of course, we don't know yet. So now all we want to wait for is this to be displaced through. If you look at that, okay, you should be agreeing with me that that is very good momentum down after we just took a major high. So this is now where I would enter a short position, and you get a drop down. So this is another good example of the 3 criteria checklist being hit. Okay, so basically that is all an inversion fair value gap is. I've kind of gone into the strategy slightly. I don't know if it's a bit too early to be talking about entering trades or whatever, but I just want you to understand how I use them in the 3 criteria checklist, because that is so important, and you're going to be using that in every single trade you enter. I use it still every single trade. I make sure that those 3 apply. If they don't, then I don't enter. It's simple as, okay? So that is it for this video. Any questions, put them in the comment section. Of course, join my free trading Discord, which is in the description. If you have got any questions, there's more free education in there. And I'm always active in there if you want to speak to me personally. Don't forget to like the video, subscribe to my channel so you don't miss my next episode, and I will catch you on the next video.